The stocks to focus on. Rupal Agarwal is Senior Research Analyst, Asia Quantitative Strategy at Bernstein, and she's joining us to take us through what her models are telling us. Rupal, great to have you with us here. Thank you very much. Exactly that. I mean, what are the quant models telling you? Basis the moves that we've had, the very large positive move here, relatively speaking, in India, and the subdued performance in overseas markets. How are things set up according to you?
So I think, Prashant, from our perspective, we do see that there are some positives which are emerging, broadly from macro risks, slightly moderating. If we look from inflation, print has come down, so there are signs of moderating inflationary pressures. But I think inflation, again, it really has to be driven by the fact that the Fed is likely to continue to hike, maybe at a slightly slower pace. So the broader point being that China opening up has clearly helped the sentiment, at least on the Asian market side. So there are these some positives emerging, but at the same time, I think there are still quite a bit of risks out there. I would say there is clearly a risk of a global recession as we head into next year. Earnings are likely to disappoint. We don't think we've seen the full extent of earnings downgrade cycle, which typically aligns with a recessionary-led cycle. There are still risks of yields moving higher, dollar likely to remain, again, more volatile in the short term. And if you look at from a valuation spreads in the market, we've not really seen any material changes in terms of the dispersion that when we started with the cycle. So because of those, some risks there, but, some positives emerging, we are taking this approach of being, cautiously optimistic, which is essentially we start adding some of the beaten down names. A lot of them will, of course, be more, from an Asia perspective, more in China, Korea, Taiwan. But at the same time, we continue, being more defensively aligned and especially playing it through the high yielding ones.
Okay, this is interesting. So you're saying that there is a risk of a global recession next year, but at the same time, the macro risks are moderating. It's a little confusing, especially when you're an investor looking to sort of, decide your asset allocation. In a market like India, what do you do, Rupal? Do you think that money could move out of India and into markets like China purely because of what you stated? China's a beaten down market, perhaps valuations look a little more comfortable there.
So, yes, I mean, that's always a risk, though I think the resilience that Indian markets have shown in recent time periods is something that one cannot really ignore. I think there are clearly tailwinds which are emerging for India, especially for the longer run, because of, again, what has played out from a geopolitical standpoint. There are clearly, supply chains moving out of China, and, India offers that potential, of both being a great production house as well as, more from a consumption perspective. So I think longer term tailwinds are there. There are clearly concerns around valuations when it comes to Indian markets. So that cannot be ignored. So shorter term, I do think that there are risks. One needs to be a little bit more cautious when adding more India exposure. But I think longer term, there are a lot of opportunities. And we did this interesting analysis around the 10-bagger opportunities. And if we look at, if we go back, since 1980s, what we've seen is that India actually stands out as the second biggest market across Asia to have produced, the maximum number of 10-baggers. So I think that's how probably India should be approached. Shorter term, yes, valuations look stretched, but I think there are tailwinds, which will work in favor of India for the longer run.
Hi, Rupal. Good morning. Nigel on this side. Rupal, I was reading your note and you're saying that China reopening, softer dollar, that's, helped on the sentiment. But earnings are going to be the driving force. For India, we're still working with, good mid-teen growth for the next couple of years. That's what most on the street are working with. What are you factoring in with regard to earnings for the Indian markets? And also, what's the downside risk out there? Because year to date, I haven't seen too much of an EPS cut out there. Your take.
Absolutely. So I think, consensus have been relatively more slower in bringing down their numbers. And honestly, this is not just an India-specific issue. This is something that we've seen across different markets. So there is this very significant divergence that we are seeing, in terms of where the expectations are and where the actual numbers are, coming through. Even if we look at from an India perspective, the way that we usually look at earnings is looking at, say, the trends in earnings revisions. And we did started seeing, some kind of a recovery from an earnings revision perspective. The rate of downgrades started moderating for India on an aggregate since May. But again, from October, we've started seeing, the rate increasing. So there is a likelihood of further earnings downgrades increasing. And if I look at from a sectoral perspective, financials is actually the only sector in India right now which is seeing, net earnings upgrades. Every other sector is seeing a net earnings downgrade. And if we compare it to typically, some of the previous cycle bottoms that we've seen, we are much further away from those levels. So there is, yes, a risk to earnings. And I would say it is not just, as I said, in India. This is something that we've seen across, US, Europe, including most of the Asian markets.
That's interesting. One final question then, Rupal. You said financials is the only sector that's seeing earnings upgrades. What are the other pockets where perhaps, A, you're cautious on, and B, you see some scope of an improvement in terms of earnings? Just trying to understand your sectoral allocation in the Indian markets now, apart from financials.
Sure. So I think the way that we look at markets always is through the lens of style. So as I said earlier, high yielding names is something that we prefer even in India. And it has support both from valuation as well as earnings. So the rate of earnings upgrades are actually increasing there. So that is one pocket to be more positive on. And if I then tie it in with the kind of sector exposures that you'd end up holding, you would broadly be more focused in energy, slight bit of materials, fair bit of technology, but a lot more negative on consumer discretionary. So that would be the sector tilt that you will end up holding if you look at the high yield portfolio in India. I think what I'm more concerned about when it comes to India would be a lot of your high growth names. Because the dispersion in terms of valuation still remains at record levels, and these growth names have now started seeing a meaningful earnings downgrade cycle. So I think that would be one area to be more cautious around, while still being more positive on the high yield pocket in the market.
All right, Rupal, we'll leave it there. Great speaking with you here on CNBC TV18 as always. Appreciated very much. That's Rupal from Bernstein with the perspective on markets. We'll take a break here. Our first on the show, a list of top stocks to watch lined up next in just a bit.